Introduction of interest rate caps in October 2016 saw a number of banks shy away from advancing loans to risky borrowers. To help unlock this, Gatundu South Member of Parliament Moses Kuria, in an intention to file a motion notice, is seeking to amend the Banking Act by introducing a risk negotiation window for risky borrowers. He argues that this would reduce the risk owing to competitive loan pricing. Kuria's proposal reads in part introduce a risk negotiation window of up to 6% above the lending cap for SMEs and unsecured individual customers to negotiate pricing based on their risk profile on a willing buyer, willing seller basis. If the amendment is enacted into law in its current form, it will increase the spread from 4 to 10%, meaning banks would be allowed to charge a maximum of 19% interest on loans to risky borrowers, up from the current 13%.
Cost of credit will become expensive relative to where it is today, but at least it's going to be available because it hasn't been available despite the regulation, government controlling the rate at 13% where it currently is. So by providing the 6% margin that the MP has proposed, at least it increases the risk appetite of commercial banks to start lending to people that they otherwise never lend to, and those were the SMEs and the retail borrowers that I think needed the credit the most.
However, the proposed amendment has been opposed by some legislators such as Kiambu Town MP Jude Jomo, who pushed for the interest cap, who says this takes us back to the days before the rate caps, when the banks were lending between 18 and 24%. Banks will treat everyone as high risk and all will be charged 19%.
Let's at least start getting them back on the credit cycle. Let them start getting loans, and then hopefully over time, if other reforms take place, if we get the government to stop borrowing so much locally, if we can empower credit reference bureaus further, and then we can think about how rates can come down. But to me, again, I reiterate, it's a welcome development.
Even though tax expert Nikhil Hira agrees that the risk posed by some borrowers has contributed to the credit squeeze, he says Kuria's proposed 6% risk window is high. Nikhil says perfecting the security against a loan by a borrower is not foolproof, and with an interest rate cap, banks are not able to price the risk. Nikhil says this is because some of the securities, such as title deeds presented as security against loans, may not be genuine. Hence, banks have preferred to loan riskier borrowers such as the government, listed companies and multinationals. Regina Manyara Gitar reporting for Channel 1 Business.